Welcome back to Income Trading 101. Today we're going to take a look at Peloton Interactive, otherwise just known as Peloton, symbol PTON. And today is Thursday, March the 25th. So let's go ahead and just get a sense of where this company has been. And I guess that's it. Looks like they would have IPO'd back in 2019. What's interesting about this company relative to some of the others that we look at is that it really didn't have, now it did have, I guess from a percentage standpoint, a decent dip, almost 30% from where it was from late February down to mid-March. And then its rise went well above its previous high. The previous high back in 2019 was $35.75. And you see this dip that happened in March of 20, mid-March, and then it's been off to the races. Even now, after a significant pullback, this thing is trading for $101.94 per share. So that is pretty strong. We're going to analyze that move, that run up and the pullback. So let's go ahead and dive in and do what we normally do. So first off, we're going to start with some moving averages and just get a sense of where price is relative to where it's been historically. So do our normal 10-day in green. We're going to do a 20-day in red. And then we'll leave that lovely yellow color for our 60-day, which is more of a 3 months of trading. And no surprise here. You see how the 10-day is higher than the 20. Couple of parts where they just sort of got chopped up, and then the up move continued. We had a bit of a pullback down, interestingly enough, to the 60-day, and then it ultimately dipped a little and pulled back higher again. And since then, we had a crossover back in late January of the 10 and the 20, and now we have officially fallen below the 60-day, and actually all three moving averages are in line right now. So if you look at it numerically, up in the upper left hand corner of the screen, you see the 10-day, the moving average, the MA10 close is 107.76, the 20 is 110.21, and the 60 is 135.28. So all three are in line, and on the daily chart at least, it looks like this is heading lower. Let's take it to a smaller time frame just to get a good sense of what's going on. Little more congestion here. So you've got the 20 period and the 60 period are only a penny apart. So they are. And actually it's just not it's really too tight to tell what's going on right now. For a lower market, you expect the 10 to be lower than the 20, to be lower than the 60, and with them only being a penny apart right now, it's sort of it's tougher to use this. Sorry, I couldn't get the words out. It's tougher to use this as an indicator. Let's go to the 30-minute. Maybe that'll offer a little more clarity. So the 30, all three moving averages are actually in line. I still like it more when there's a larger degree of separation between each of them. So with the 20 and the 60 period are about $1.77 apart right now at the 30-minute level, and the 10 period is $4, really $3.60 less than the 20. So the more separation, the more confident I feel that the move is going to hold. So at the 15-minute, this is great. 15-minute looks like a down move. There's a lot of separation between the 20 and the 10 and the 60. And even though the 20 and the 10 are still a little closer than I'd like, all is well, all is in order, and it looks like this is going to head lower. So let's kick it out to the 1-day level again, and we're going to take a look this time at the MACD, which is the moving average convergence divergence. It's another one of the signals I have managed to use profitably in the past. And you see this crossover that happened back on the 15th of January. If you remember that on the daily, it was the 28th of January when the 10 and the 20 crossed. Here you've got the MACD crossing on the 15th, and we had it below the zero line out here on the 17th or so of February. So you had almost a month before it fell low enough to fall into negative territory, and it really has just gone down lower from there. Now we've made a crossover on the daily, at least. Crossing in the oversold category is typically a bullish indication, but again, if it's going to go kind of flatten out, I really don't trust this signal because it can move around quite a bit and lead you astray. So let's take it to the 1 hour and see if we get a different result. So at the 1 hour, you've seen a bit more oscillation. You recently had this crossover above the zero line, and now it's back in the negative territory and looking like it might head lower. So let's look at the 30-minute. 30-minute, likewise, crossed above the zero line and is in the negative territory. Now, it could obviously cross and go positive again and appear to be heading higher, but I'm not convinced of that just yet. Let's take it to the 15-minute as well. So the 15, we did see that crossover, and it appears to be pulling higher. But if you remember, on the moving average at the 15, it still appeared that the moving averages were pointing to lower price, a lower trend too. So that is it for this. Let's take this back to the daily, and this time we're going to run through a little Fibonacci analysis. And I do like that there's been a retracement here. It's definitely worth using this to see if there are any levels that we should be aware of. So that looks like it's roughly at the top there. All right. So we currently have, let me shrink this a little bit too, just so we get a better look. We currently are sitting, we've bounced off the 50% level, and we appear to be heading back towards it. If we do cross this 50% level, I would expect us to fully drop and start to approach this 61.8% level. What's interesting here is that the 50% level also lines up with possible resistance back in September of 2020, and we saw it turn into support in November of 20, and support also recently earlier in the month on March the 5th sort of had a support line around here and before bouncing higher. So if it breaks that support, I could definitely see it going lower, and possibly the 61.8% level being the next level of support. And you see that back here in September of 2020 as well. So lots going on. Definitely worth watching this and seeing if it's going to head lower. Clearly, we are in a downward trend right now, but I'm going to point out one other thing too that could end up happening with this. We're going to stretch this out a little bit. And this is like my personal kryptonite, and that's sideways channels. I always want to keep an eye out for sideways channels because I've typically been the guy who's like, oh man, we're going to bounce back or we're going to break out and have a much lower move, like going down to that 61.8% level, when in fact the bounce back never really happens, and you end up more or less just, trading again. So consider that the caveat right now, right? If we break through this level and head lower, I expect us to start to approach that 61.8% level, which will still be $20 lower. But if we bounce off of this level and the 50% remains support, you could definitely see us pushing another $10 to $15, possibly even $20 to the top of this range. So that's it for today's analysis on Peloton. Thank you so much for watching. Hey, if you would, please go ahead and subscribe to the channel. I'm growing my subscribers. That really helps me out and keeps me inspired to keep making these lovely videos for you guys. Thank you for watching. Thanks for taking the time out of your day. And as always, happy trading.